Crypto is pumping. Crypto ain't dumping. Wait till next week. It'll dump back down, you dumb bitch. Pulse beats 555. Valiant Loki, Daddy peg me. I heard you need a pegging, son. It's gonna be fun. Wait till I'm done. One man saying that is fine. If that's your opinion and you're not in it, that's fine. But there is an entire market of millions and millions of people that agree that it is a store of value. So, you can think one thing, but there's also a market, and markets tend to become efficient over time.
We do know that you will always get paid in Hex on a daily basis. And that is truly the miracle that we call Hex, because it is trustless interest, trustless yield. Nothing will stop that contract from running.
Welcome in, everybody, to the Creed of Crypto. My name is Blarty Boy Crypto, and I have here with me, as always, my friend and co-host, Crypto Ewok. Welcome in to everybody in the chat. We got Valiant Low Key in there, Pulse Beats 555, and others pouring in as well. It looks like the chat is actually working this week. So there was some sort of YouTube issue last week with live chats not working, I guess, across their entire platform. But welcome into everybody. We got a good show for you tonight. We got War. Good God, what is it good for? I think I combined two songs right there. We've got that and a lot else going on. We got crypto pumping now. So when I originally created the show and the thumbnail and everything, things were not looking so good. And all of a sudden, we have things moving up a little bit over the last couple of days. So some very interesting stuff going on right now. We have, we'll get into the prices in a minute, but things are moving up at the moment. We've had other issues, obviously, with war type stuff in the past, and we talk about how sometimes that is good for crypto, as crappy of a thing it is to say. I mean, it is something that, does inflate crypto prices. So we'll get into what is going on there. Some huge news, obviously, with the U.S. and Iran over the last few days, and a lot more. Duke of Booze in the chat. Checks my pulse. Welcome into you guys, as always. Hit us up. Would love to hear all you guys' thoughts on everything going on in the markets right now. But Ewok, how are you on this first Wednesday in March evening?
Yeah, Ides of March, or not the Ides of March, but March is here. Yeah, I'm fine. It's I don't know that the war is going to do a whole lot. People keep saying, is it going to affect any markets or not? Looked like it did immediately, and then everything just kind of came back. So just kind of hanging in there, waiting. Like I said before, just waiting our time until things get turned around. We are having a nice little pump today, so that's exciting.
Yes. Yeah, War Pigs, definitely. One of my favorite Black Sabbath songs. Very good. Generals gathered in their masses. So a lot going on tonight. We had a very positive reading from the ISM and the PMI that came out on Monday, with another reading over 50 for the business ISM for the month of February. We'll get into that. I mean, everybody's all ready to throw cold water over all of that and tell you how that's not going to mean anything either. But yeah, we got a lot of stuff to get to. So love to hear from you guys. Let's just kind of start off with where we are with Bitcoin and ETH in this market right now. So at the moment, it looks like we've got, as this, my app won't load, we got Bitcoin at just over 72K. It hit almost 74,000 earlier today, which is awesome. 72.45K right now for Bitcoin. We have ETH flirted with that pretty key number. There's a big level of support at 21, support and resistance at 2150. It's at 2120 roughly right now. So good to see ETH back in the 2000 club for a day or two, maybe here. We'll see how long that does last. But we're seeing some strength in the markets. We did see Bitcoin, really bounce off that 200 MA, which was an important thing to see. It got as low as into the low 60s. It may have even touched like 59, 58K, which was the bear's wet dream over the last couple of weeks. And we're seeing a little recovery rally here. I mean, most people are quick to call it a relief rally, and we're doomed and going to 40K, obviously, by the end of this year. Nobody knows for sure. That's one thing you can learn long-term investing. But I guess for a day anyway, it's nice to see things rallying up. We haven't seen this for a little while, obviously. I mean, it's been since October of last year. Crazy to think. I mean, over 6 months at this point since Bitcoin was at its all-time high of 126K. We're seeing a little bit of a rally now. And I'm curious what you make of this EWalk. We can kind of talk time frames and what we think is going to happen with BTC here. But essentially, again, the majority of people are still in bear mode and looking for that lower number, and basically for things to, go exactly as they always do every 4-year cycle. And the Bitcoin will bottom out in Q4 of this year at like 40 to 50K, maybe even lower than that. But what say you? I mean, if we're talking 50K, we really already weren't that far off from it. So we're pretty much, in the low 60s to 60K already. So what do you make of this? And what do you think for the rest of 2026 for Bitcoin anyway?
Well, yeah, I mean, it did hit 59K. Like I think it touched it here. What do we have? Well, it was like 60,001. So that's about as low as it was, and that was back on February 26th, last Friday. So yeah, I mean, we are starting to see a nice little trend. I mean, if you look, there's an upward swing here. Now, this is the daily chart. Doesn't say a whole lot. When you zoom out to the weekly or anything like that, you're not seeing that yet. And I think that's kind of where we need to go to kind of pick up on anything. We're still in a macro bear downswing. Like you said, since September, it's kind of down, rally a little, down. This could be the rally a little, and then another downswing, if that in fact is the case. You mentioned the 4-year cycle. Nothing about this cycle has been the same as any other. We had an all-time high before the halving. Usually it's after, so that was different. We didn't have an alt market like we normally do. That was different. Ethereum barely reached its all-time high for an hour or two. Again, that's different. So I mean, there's nothing standard about this cycle at all. So, it's either the altcoins were just not involved this time, or this has been that thing that we had talked about before, where it's one of those Elliott wave, it goes up, it pulls back, and then it makes a big run. So that could also happen. I mean, you have to look at both options, because no one really knows, unless is a time traveler out there with some sort of knowledge to the way it plays out. But I think both of those options are still on the table. I don't believe that anything about this cycle has been normal at all. So, when I look at Bitcoin, I'm like, well, if it goes down, it's not going to go down much further. I don't believe, because of the way history, again, this has been different, but The way history plays itself out before it dips. We topped out at about 69,000 here, got all the way down to about 15,000, something like that. Um, you know, a fourth of it, basically. You get up to 126,000, 127,000. You take a fourth of that, and you're looking, maybe down into the 40s, 50s. Um, Again, I just don't even know what to expect because nothing has been similar to any other cycle, especially with the entire thing, the way it's played out. So, very good question. Like I said, I don't see it going down a whole lot further. At the very most, I would say this 38,000 line that could to play. Right, 3840. Um, is this just a fake out and a consolidation like this level here was back in December before it takes another trip down? If it does, I think it could get down into there pretty quickly. So I don't even see about if it does bottom. We could be looking into here, maybe May, June, and then things take off again. If this Elliott wave plays out like, as just a pullback consolidation area. So I don't know. It's a bunch of who knows at this point. You throw your hands up in the air and say, man, this just doesn't match anything with the previous cycles. Now, there are some similarities, but again, getting to the all-time high before the halving even happened, that was probably the first red flag as well. This may not be the same. So, and then we look at ETH. ETH, again, very similar structure, everything about it, but this has been more of a consolidation than really a pullback. Like, I haven't seen a major drop like the last cycle. Actually, the top was here November 21. It pulled back to, it went from what, 4,800 ish back down to roughly 886 or so, what looks like to be a low, 880. So yeah, and then from there it really just hasn't done anything. So again, another signal that, man, this is just not a normal cycle. I don't know what's causing it, the reasons, whether it's the ETFs, it's the major players. We obviously know that there were some manipulators happening out there that got called out, and then it kind of just stopped. If they continue to stop and we see rallies like these, it's pretty significant for us to say, well, that's probably the main cause of all of this confusion and why nothing is like it probably should have been. So, yeah, I mean, again, positive things looking. We are seeing on the daily a very nice uptrend here. Just continuing to make higher lows anyway on all of these candles. They just continue to go up. So, that usually gets slapped back down, but how far will it come is the question. So, if we can get this price to slowly get up into the 23, 24, 2,500 even on a slow, gradual run, that is going to be a very good signal that things are potentially turning around. Get these crossover, get the 50 to cross back over the 200, and we could be off to the races.
Yeah, interesting to see this bounce. And I mean, again, it's interesting. When I first was writing the show notes the other day, it was in reaction to the attack on Iran, obviously. And I guess we can talk about that just for a moment here. I mean, neither one of us are obviously geopolitical experts or anything like that. But when that first did happen, just the news of the attack, I think it was Friday into Saturday, if I remember. Obviously we saw prices start to come down, Bitcoin into the low 60s, which I don't know about you, Ewok, but when that was happening, people seem to be reacting like really extremely, and I didn't really even feel anything because
Mm-mm.
I guess just because it's been so bad for so long, I'm thinking like, oh, okay, yeah, this is going to be the thing that makes us crash even further. You know what I mean? It's
Yeah.
already been horrible. So, and then after that, and then we find out that the Ayatollah is very swiftly killed. Many around the world celebrating it and things like that. Trump makes an announcement about it. All happened extremely quickly, obviously, and then all of a sudden, Bitcoin and crypto gets relief rally as soon as it's over and retraces the whole move, and now this is where we are today. So, I guess my question to you is not so much about what do you think about the inner workings of the U.S.'s relationship with Israel or Iran or anything like that, but just the fact that this happened so quickly. You and I were talking about it just hanging out the other day with I don't want to say the phrase like when Trump says he's going to do something, he does it, because we know that's definitely not true. But this, happened out of nowhere. It reminiscent a little bit. I'm not saying it's the same situation, but how quickly the stuff in Venezuela that just happened, a month or two ago at this point, how quickly that happened and their leadership was just captured. You know what I mean?
Mm-hmm.
And then we see this with Iran. So I don't know. What do you make of this situation as best you want to get into it? And then also, what about this affect long-term on markets? And obviously, because we're selfish and care about crypto, more specifically crypto.
Yeah, I think there's two things at play here. I think we definitely do the bidding for Israel a little too much. I think this really benefits them. I think Netanyahu has, made several trips to the United States to try and talk us into doing just what was done. Um, and and I know they control a lot of things. If you go down enough rabbit holes, you'll figure out that they're behind a lot of the things that happen in the world. And the US kind of gets blamed for it. However, Israel is usually behind it. Um, that being said, there's also discussions of the attempted attempted assassination of Trump being funded by the Iran people. So, there could have been a little vindication for that as well. So, again, I'm not geopolitical by any means. I really don't worry about what's going on the other side of the globe too often, or care. It doesn't affect me a whole lot one way or another. But it does affect the markets usually. And I was surprised to see how quickly, there was a reaction, and then boom, it just kind of bounced back, and as if nothing really bothered it. So I found that interesting. But yeah, I mean, it's that the signals for the plays, are bound to happen soon. Whether right now they're risk off. You've got the gold still. We haven't looked at the gold price recently, and it's still hovering, right around 5150 or 5160. It did have a little pullback. So people are still going the gold silver route. The riskier things just haven't quite happened yet. So I don't know what kind of trigger will cause that, other than we've discussed the new Fed chair. We've discussed some of the other things that are coming down the pike. One of the things that we'll talk about tonight too was the Kraken news. So there are things lining up. It's just a matter of when do they get flipped on, and when does this thing really take off. As far as the war goes, I think it's going to be over pretty quickly. I don't see this lingering. I know Trump is very much against innocent soldiers being killed. So I know he would much rather get this wrapped up and taken care of and done with sooner rather than later. So
yeah.
Yeah,
interesting developments all around. And then let's Yeah, some very cold Viper styles. Yeah, I got to be all bundled up here, Blarney boy. But let's transition to this part of the news that has happened this week in terms of the future of the cycle, Bitcoin, Ethereum, and altcoins. So I think this is the best thing to go into real quick before we get into the Pulse Chain ecosystem. Obviously we had the Iran stuff, war, and everything. Now on Monday, so a lot of people were hotly anticipating the business ISM PMI reading that was going to come out for the month of February. It's caught on that's been a very good indicator of alt seasons occurring, which we haven't seen one of those in years. But it's again kind of just known that has brought on risk on environments. The PMI reading basically shows and states it's basically a pool that shows and states that we're in an expansion mode as opposed to contraction economically. And the January reading was, I forget the exact number, but it was over 50, which already was a shocker. I mean, most people, we've had like a record number of months in a row of being below 50, which has been horrible. The January reading,
I think January was 57, wasn't it?
No. That's the Chicago PMI for this month. It wasn't that high. That would be insane. But no, I think it was like 51. But either way, the fact that it was even over 50 was crazy. I mean, people were not expecting that for January. So it came in over 50, which was insane already. And then, of course, that comes in over 50, and all the bearish people and stuff like that see people celebrating that and say, okay, well, it's because of the holidays and, higher than expected numbers, and it's going to go back down in February. Contrary to that, it stayed over 50 here in February. We get the reading on Monday. It came in at, I think it was 52.4, which I think actually was an increase. Days before that, the Chicago PMI came out, which is a very good leading indicator of what the whole country PMI will be. That is what came out at 57, which is a gigantic number. And then 52.4 for the PMI here this past Monday. So now, the reason that's so good is because now are we looking at a trend? Now it's 2 months in a row of seeing this, which is very big. But again, so many people are out there, and I get why. I mean, they've been, by being bearish on everything but Bitcoin, they've been right for the last couple of years. So any news or developments that anybody that is looking for an indication that Ethereum could ever do something again is pointing to these different things, and some of them have just not lined up. Like last year was all like the liquidity cycle numbers, and then Bitcoin started to decouple from that, and everybody was like, yeah, you're wrong, that has nothing to do with it. So now when bulls are quoting the PMI numbers, the same people, the Bob Lucases, the Ben Cohens, whatever, it's mainly like the charting people, are saying that, like, Bob Lucas literally called the PMI the biggest cope in crypto the other day. Somebody asked him about it, and he said it was the biggest cope in crypto. And what else here did I have? Ben Cohen. Oh, yeah, here's the other thing. Ben Cohen has been shitting on it as a metric to be used at all for weeks now, but he was like live posting the reading the other day I saw, which I thought was interesting whenever he's just shitting on it as, something to be ignored. So, I guess what do you make of this? Because it's weird. I just want to be cautiously optimistic. I do hate the fact that we have people out there just bull posting like the biggest alt season ever is coming. You have no idea what's in store. I mean, people always have to end up taking it too far. And I guess it doesn't really matter at the end of the day what people do say one way or the other. What's going to happen is going to happen. But I don't know. What do you make of this? And of course, like I said, all the mainstream Bitcoin guys quick to just completely throw cold water on this like it means nothing.
Well, I don't pay attention to them, so I really don't even honestly, I don't listen to Bob Lucas or Ben Cohen or any of them. As far as that goes, I really, again, don't know. And some of these people that say the biggest alt season could be coming could be right. They could be absolutely right. Again, nothing has been the same as any cycle before. There's too many variables that are completely different, completely changed, suppressed numbers. We have an administration where everybody's out to kind of do the opposite of what the president wants. So, all of that coming into play has a lot to do with what we're seeing and what's happening. Eventually, though, I think the walls come down and we do take off. I just don't know when it's going to happen. There's so many things that are being set up for perfect scenarios. It's just when, we just keep saying when will this happen? When will this happen? And the Bitcoin guys will always turn around and say, yeah, but then this is why. And, so there's always people post everything. If they're right, it stays up. If they're wrong, they delete it.
Mhm.
It's just there's nothing that you can really go as far as what's going to happen. So yeah, I mean, it's just a wait and see. It's a matter of just holding on to your assets that you believe will go up and waiting. And that's really all we can do.
Yeah. Yeah, I think you're right. And the other thing with a lot of the kind of maxi influencer types and stuff like that is they usually say enough things where they can claim to be right. I think that's the case with a lot of what Ben Cohen says. I mean, he just says that this or that can happen and then he can claim to be right. And keep in mind, a guy like him makes money from like his private groups and stuff like
Sure.
that. So, I mean, either way, there's other income, I'm not, you're allowed to do that. Obviously, it's a free country. I just mean, keep that in mind whenever you're listening to people like that. But
Yeah.
yeah, I think it is an interesting development for sure. There was one other point I had on that, and I don't remember what it was. But yeah, I mean, hopefully. What I was going to say is it is interesting because the PMI reading thing is definitely positive, but you also kind of wonder because, like you've been illustrating this whole time, that this cycle has been so weird and so backwards from other ones, like Bitcoin, hitting a new all-time high before the halving, no alt season, all that stuff. I wonder if the PMI, in the past, it's kind of meant like within 6 to 12 months, like things are really popping off. Now, will that actually happen this time? Like, will there be, new sustainable new all-time highs for Ethereum within the next year because of this, with a true alt season because of this? Or does it just mean that the worst of this bear market is over and it never gets to the point that people are talking about, and Ethereum like front runs Bitcoin going into the next cycle, which I think is something that could be very real. Like Ethereum
Mhm.
front running Bitcoin could definitely happen because again, it never did anything this
Yeah.
cycle. So that's the interesting thing to me is how this, like the PMI is happening one way or the other. If the trend continues, how will it affect things time frame wise? I think that's kind of an interesting thing too.
Yeah, it's interesting, and that's another good point is the whole Ethereum doing a flip flop and taking over and running first. That could be interesting too. Again, another just completely different thing that we're used to seeing, right?
Hmm.
There's, I think, with Bitcoin being at the top of what Richard has always said was it's at the top of its S curve.
Hmm.
Things are going to even out a little bit, not run as hard, not drop as much. Um, could open the door for exactly what you said, and that's Ethereum having its, a nice run up. Now, it's not that much newer than Bitcoin. It was launched in what 2015, 16, I think it was.
Hmm.
So, it's 5 years behind, which is essentially a cycle and a half. So, it could be also approaching its S curve, and especially with institutions buying it now, things are going to hold up in price a little bit better. But yeah, it's going to be just a wait and see type thing. Um, yeah, I wish I I wish I had a better outlook or knew or had an idea, but I just don't.
Well, either way, I mean, the PMI is a leading indicator type of thing. So it's really good to see. Any kind of good news we accept at this
Yeah,
point,
for
basically. So
sure.
after all these years. So we'll continue to monitor that. It's usually the first weekday in a new month that the next reading comes out. So or very early April, we'll see what the March reading is too. Also, we've got just one last macro thing that doesn't really matter at the moment. I think it's mid-March here that we have the next FOMC meeting, which is going to be I think maybe the second to last one with Jerome Powell, because I'm not sure because I think there's one in May, but I don't know if he would be the guy for that or if it would be Kevin Warsh by that time. So I
I
think
thought March was when it was happening, right?
I thought it was May. Now I know Warsh was just like officially nominated, but he's not in there yet.
Okay.
So, yeah, I'm not sure.
Okay.
But we'll see. Meet the new boss, same as the old boss. So we shall find out. But that is pretty much all of our coverage for the macro stuff. But yeah, welcome to you guys in the chat. If you're enjoying it so far, do us a favor and hit the like button. We do this every Wednesday night at 6:30 p.m. Eastern Standard Time. We got Destroyer joining us now and a lot more. So appreciate all of you guys. Let's go ahead and get into the Pulse Chain ecosystem and see where we're at. We know that Pulse did revisit and I believe touch new all-time lows over the weekend when the Iran news was going on. It was a very, dismal time basically throughout crypto and people, worrying about where we're going to go. But as you can see, Pulse Chain is rallying with the rest of the market here on this recovery pump. We have Pulse up to about 10x away from SAC rate at this point. So 50 is 9935. It was up to, I think, like 1002 at least I saw earlier today. So it has rallied up. I know it's about 25%, 30% up off the low at this point. Pulse X at 50695. We have Inc at 43 cents. Hex is 002, up 15% on the day. And EHEX up 10% on the day at 307353. So, seeing a little bit of a rally with this ecosystem with the rest of the market, but certainly scary times, scary if you want to refresh and look at your portfolio, obviously. Over the weekend, again, with the Iran news going on, other than Bitcoin and Ethereum, obviously altcoins are going to get really hurt bad in a scenario like that. And especially because we've talked about the liquidity issue here the last few weeks, Ewok, with, whether it's a feature, whether it's a bug, that the liquidity within this ecosystem is just absolutely so low, unthinkably low. And that can lead to prices really moving down quick and also moving up quickly. So, what do you make of any of that? You can look at the fear and greed. Take us wherever you want to go here.
Yeah, well, the fear and greed has come up. I mean, it was at 9, 10 earlier last week. It's kind of crept up to 19.
That means we're going to sell now, right?
Well, not yet. Don't do that. It's not time for that. It is positive though. I mean, things are coming around. Obviously, when you've got green candles, that happens. People kind of, the fear goes away just a little bit, but people are still pretty hesitant. I've seen some wallet watchers posting how there are still a few people that are just daily dumping and are getting close to being out, which is very exciting. All of these red candles stop if people start to value what they have and hold, and that's the bottom line is that people just are continuously dumping and not valuing the coins that they hold. That's seriously what's causing this downturn. I mean, it's as simple as that. Once those people are out and no longer can hurt the chart, I think things are going to go like this on a regular basis. I really do. It will be distributed into much more hands that will hold the price and value what they have. Let's take a look at the Pulse Chain chart here and see that we are creeping up on this trend line that I have drawn on here. Again, we really need to get across that or above that in order to feel like it is changing. These wallet dumpers, they do let things build up a little bit and then they'll release a large clip and it just brings it back down. So again, I wouldn't get too excited until, we are up back over the 5 zeros anyway. We get back into the 4-0 territory and, kind of creep on past that. We hit some of these other levels like the 4 zeros 1-2 1-2 is about this next level of importance that I would say if we can get past that, then the trend may get turned around. Again, we got to get above this major trend line that has just been down only. I mean, you can zoom way out here and draw an even bigger trend that would show the overall market, but I would rather do it on this macro, the more micro trend here since August of last year, that it's just been a nonstop drop. So, one little thing at a time here, or it's one trend at a time, I should say, to break. And again, I think we need to get to the 4012 to start seeing something that could possibly benefit, meaning that people are out. People are not selling anymore. People are holding what they have. And there is a change in sentiment where you do see a lot more buying than you do selling. You look through today's, I mean, obviously, when you're looking at the trading volume, you're always going to see a bunch of green ones, a bunch of red ones. And today was obviously a lot more selling, it looks like to me, than buying. But earlier today, it was all green, very early. So actually, this was only an hour ago. Yeah. So, yeah, I mean, again, how many buys today? You had 2,340 buys for 429,000. You had 2,741 sells, but only 402,000. So, we had an influx of about $30,000 on the positive side, more buyers than sellers today. So that's always a good sign, especially when the buyers are a lower number than the sellers, and you have more influx. That means there are bigger people coming in. You have a lot of smaller people unloading little amounts, and then fewer people buying bigger amounts. So
Yeah.
that is a good sentiment where you see some bigger investors coming in. That's always positive to kind of keep an eye out. And if this was the bottom back here at the 5078, that would have been a nice one to catch. So yeah, again, it's looking good. When you zoom out completely, it looks horrible. But you've got to start somewhere, right? And we always hope that if that was the bottom, things can take off from here, start a new trend, and work our way out of this funk.
You can also make it not look so horrible by just pinching those prices on the right-hand column too, and make it look like just kind of a flat line. So sometimes I play around with that. But if you really want to capture,
Like this,
there you go.
Yeah.
But yeah, if you really want to capture people's potential emotions over the years, then yeah. And a point too, just kind of psychologically with DCAing right now. And shout out you guys in the chat. I was reading a couple minutes ago that some of you guys have put like huge clips into the ecosystem over the last week, which I'll tell you what, those are some big balls buys right there. I mean, that's balls of steel over this last week with all the things that are going on right now. I've been thinking that it was big balls for years. Maybe we're all just stupid, but either way, I mean, it's incredibly courageous, these buys. I see you guys saying that you've put in over the last week because yeah, it's been volatile again, the low liquidity and everything right now. That was a point I was going to make earlier on is I actually understand the opposite if you're a little bit timid to DCA right now. Now, obviously, this rally like we've had over the last day reinvigorates you and makes you think like, okay, all right, here we go. I'm good to DCA in. But yeah, it's still, we're in a territory where we are kind of in that no man's land, like we just talked for the first half hour of the show, of all these people really not knowing where we're at, what the cycle is, what it's not. We didn't have an alt season for the entire bull market of Bitcoin over the last few years. So it makes sense that you would want to keep your head on a swivel and like not, throw everything you possibly can in as soon as you have cash on the side. It's kind of a little bit more of a, you're realizing, and we talked before about if you're in crypto looking at it from a long-term perspective, which I mean, that's still much shorter than a regular, retirement savings fund time horizon. But I think at this point more than ever, it's prudent to, slowly maybe get into the market just because we don't know where things are going right now. But if you've been buying a lot this last week, you've been buying the all-time lows for Pulse ecosystem anyway. So let's hope we go up from here. So you have any other thoughts on the prices? Yeah, pre-FOMO.
These guys are calling it pre-FOMO. No, I did want to take a, I mean, this is just a very similar, but this is the EHEX chart that's having some nice momentum as well. I don't know where the best place to. I want to start keeping an eye on the EHEX PHEX ratio.
Yeah.
And I forget where the best place to see that easily.
You can get it on Dex Screener pretty easily. I think if you just do EHEX/hex, I think one of them will be the pair. I've messed with it before.
Search EHEX.
Yeah, like if literally in the search bar, I would just do EHEX/hex. And I'm pretty sure one of the main results, I don't see the monitor you're doing it on, but I'm pretty sure one of the main results should do it.
Yeah, I know. I'm on a different screen. That's okay.
But yeah, I've found it pretty easily on there before.
Well, it's definitely not the number one when I do EHEX hex. Anyway.
Okay. I know I've seen. Go ahead.
There it is. I found it.
Okay. Yeah, that looks like it.
So then if you do it in EHEX terms,
yep,
we are at 0.33. Okay.
So if you zoom out, I find it funny that they have the Bitcoin Hex logo up there. Yeah, I mean, are you sure this is the right way of looking at it? Is this Hex versus EHEX? Because where's the big Richard Hart tweet post dump and stuff like that? I don't know.
That would have been right here. No. Yeah, this is Hex.
This is inverted. I don't know.
Because it's Hex EHEX. It's not EHEX hex.
Well, you would want it the other way around.
Well, I know, but I didn't pop up. So
okay, all right. Well, imagine this with the opposite colors, everyone. And okay. Well, yeah, I do. That's definitely that candle. So, I mean, this would indicate that Hex is going up against EHEX recently. Then, if that's what we're looking at here, you know what I'm saying?
Yeah.
All right. Well, I thought it was the other way around. I thought we were seeing it go the other way around lately. I'm trying to find the right one. Everything I'm seeing is just EHEX versus Pulse. Oh, here, I found it, I think. Not going to help because I have it on my phone, but yeah, just do EHEX/hex. And I think the one I just picked was the third one. Wait a minute. No, you know what? Get rid of Hex. Just do EHEX. So just, back out of there. Okay, let this go. And, okay, third one down. Oh, are you? Oh, yeah, there you go. I can't see. Go ahead. Whichever one looks right, I can't see. Yeah, this should be it. And then make sure it's in Hex terms rather than USD. And then this should be it.
There we go.
Okay. All right. So it is moving down against Hex a little bit recently, but overall, I mean, yeah, you can see that it's been closing that gap. I mean, it's been up above the Richard Hart tweet thing, which is those huge red candles back there in whatever that is. I don't know, August, September of whatever year that is.
Well, that was back here.
No, there it is. You're right. My bad.
It's this one. It was February March of 24.
Okay.
When he said the market has decided.
Yeah, the market.
So we are not there yet because I think that when that happened, it was 0.6. Yeah, it was 0.6 when that happened.
Yeah. Okay.
So.
Okay, not to the top of the move. I see what you're saying. Yeah. But yeah, you can see, I mean, it's very gradually come out of that range. And that's why, I mean, I know we've had this conversation a lot on this show, not recently, though. Like, I'm glad you brought this up. I don't really even hear the debate about Hex versus EHEX anymore. I think it's more just Pulse Chain sucks is what people like to say, versus the Pulse Chain is amazing. But with this, I've been when I DCA, I buy Hex and EHEX equally. I still have basically the entire time I've DCA'd into it. I know when we've had Johnny Chaos on in the past, he's talked about like, why choose? Like they're both there. Regardless of anything that Richard has said in the past, I mean, I think the argument is going to remain true that EHEX is still like the easiest kind of barrier to entry.
Sure.
to get into his stuff, get into the ecosystem. I know this would be music to old Dip Catcher's ears, who's building out an entire, I guess, blockchain with with eHex as the gas token, which is the FlexNet. I'm not sure what's going on with that right now, but yeah, I mean, we're seeing it move up. But yeah, talk about that, where we could see this one day. And yeah, I've been buying both whenever I DCA into it.
Yeah, I agree. I try and keep an equal, very close to equal amount of both, even though the prices aren't the same currently. Again, I think I mentioned it last week, as I focus on units more than I do price right now. I really don't want to even see the price, but how many can I get? That's been my goal for a lot of these things. How many can I accumulate during this time? I want it to be more than, with Pulse and Pulse X, what I sacrifice for. I have gotten to that point where I do have more than what I put in for sacrifice. It's been pretty easy to accumulate. You're getting, several tens of millions for a few $100, so it's been easy to accumulate those. As far as hex goes, yep, I when I buy those, I try to keep it as even as possible, and keep my stakes as even as possible as well. I still stake on both chains. You're right, with Ethereum, you are much closer to more on ramps than you are with Pulse Chain. So I think that people will find that first when things start to pop off and they see these numbers, and they will discover eHex first. If they have a good experience with it, then they could jump over into Pulse Chain. But yeah, I mean, closer to the money, closer to the on ramps. I still don't see any problem with the eHex. A lot of people that were talking trash on it, and that's because they sold. We've discussed this many times before, that people talk about what they hold, and they shit on the things that they don't. And because they want to be right, they wanted to be right, making the right call and being on the right side of it when there wasn't really any need to take that chance. So
Right.
you and I were in the same camp of why choose, right? One of these could do better, but who knows? Maybe something happens along the way where somebody does decide that, hey, it makes the most sense to keep these pegged together at the same price. Hex is hex no matter what. And I think that would be huge for Pulse Chain. If I think it would be a great onboard to be able to have that liquidity on both sides and have an equal priced token, whether it's on Ethereum or on Pulse Chain. It just, I mean, I think it would be hard, but I think once you got it close enough, there could be plenty of arbitrage bots keeping it together. There's no reason with enough liquidity, and the OA definitely has enough liquidity to bond them together forever. So it could be done. I think it should be done. I think it makes the most sense. Why confuse people with two different charts? It just adds an extra layer that doesn't need to be. It doesn't need to be added. So
Right.
that's been my outlook all along. I know the people that sold all their eHex and bought pHex only. That's why they say that.
That's the
Yeah,
funny thing. I don't know where they are anymore.
well, everyone's quiet. So
Yeah.
I mean, yeah, but they'll come back out of the woodwork when eventually when things and price turns around. So,
Yeah.
but yeah, again, just I think everybody's different. You do what you feel is best for your situation. I know Tam is a big Hex fan, and she's been stacking. I don't know what her preference is, but maybe she'll tell us here. But again, for me, it's buy both. So
Want to take this question from Philly. You'll probably like this one, Ewok. He says, for staking, do you think if price goes up, the fees on Ethereum will be really high compared to when your stakes end on Pulse? Or do you think the Pulse fees will rise a lot too?
well, I think Ethereum has been scaled enough to where the uh, block size has definitely increased, right? They're getting more into a block. They're scaling it more to where the fees are super low. Um, that also has kind of hurt the price, right? So, I mean, you have to look at this both ways.
Right.
As the fees get lower, the demand for people to buy Ethereum go down as well. When the fees went up, people were having to sell things to get Ethereum to have enough gas fees to make a transaction. So it, it's a double-edged sword, right? You want to keep your gas prices low, you want to keep your transaction fees low, but in order to do that, um, you don't see a whole lot of price increase. So it's
Mhm.
it's very weird. It's a double edged sword kind of thing where you know when the blockchain does get busy, they will go up. But I'm curious to see with the improvements that they've done, how much. I've told this story before. I'll tell it again. In the heat of the last cycle, when I had a stake end, I spent $1,600 to end a stake, um, because the stake itself was worth way more than that.
Yeah.
I did have to, some of these ones where it was costing a fair amount, I was having to sell a little bit of hex in order to end a stake to get more hex. It it came out positive on in favor of me, but when you look back at it, you're like, what was I? It was
Right.
crazy. Now, the good thing is, and this is not tax advice or anything like that, but if your crypto is in a business, those can be technically considered um, business fees,
Mhm.
and you can write those off. So if you're careful and you structure it right, that's a possibility. So yes, $1,600 to end a hex stake, Viper Styles. That's
Yeah. It's
what I
funny
had to pay.
from Philly here too. He said, I remember last year a bit further back, the ETH fees were wild. I mean, I don't even remember anything that wild last year, but yeah, last bull market. I mean, for those of you that were around then and with NFT mania and stuff like that, yeah, what Ewok is saying is not a stretch at all. Like that $1,600 end stake. I mean, there were swaps for five. You had to pay $500 for basic
Yeah.
swaps and stuff like that.
Well, and remember, that's why Pulse Chain was created, right? Because it was costing us so much to end a stake, that Richard was like, "This is ridiculous. I want to see that capital go back into buying more hex, not ending, not paying gas fees." So that's why Pulse Chain was born in the first place. So, and then it scaled and the prices came down and everything. Now we're seeing point 8 Gwei. you know,
Right. Yeah,
we're
they had to
talking,
create decimals. They used to not have those. It used to be
yeah,
1, 2, 3, 5, 10. Yeah.
we're talking over 100, 200 Gwei
Mhm.
to do a transaction. And the S load, which is the ability to do calculations, was quadrupled essentially
Mhm.
at the same time. So our price of the because Hex actually does a calculation, adding up all the T shares or all the daily Hex per T share that you earned. It does that mathematical equation before it mints you your new ones. It was taking up a lot. So
Mhm.
that's why the prices went crazy.
Yeah. Yeah, it was absolutely insane for anybody that wasn't here. We've gone along. I mean, I remember like being happy that I could bridge to Pulse Chain in early Pulse Chain days for like $15 or something like that.
Yeah,
Like now, I don't think I've spent more than 50 cents to
right.
as a bridge fee or something in months. So yeah, it's wildly different right now. I was just going to see if I think there might have been one or two other comments on this that were interesting. Yeah, talking about the ETH fees, it is a catch 22. That's what he was referring to. And I know Richard has talked about the point that you made, Ewok, many times about you want there to be the demand for ETH. Like you want the fees to be higher
Yeah.
because it means there's a demand for it. And those L2s have heard it, obviously. over the years. So luckily,
Yeah.
Vitalik seems like he's realizing that now. So,
Yep.
all right. Good convo there. That's not stuff we've gotten into for a little while. So if you guys are here and enjoying the show, do us a favor and hit the like button. We do this every Wednesday at 6:30 p.m. So I appreciate you being here. Two more main things I think we want to get to that were very interesting today. So Trump made a post on the Clarity Act on Truth Social or whatever it is called. And we had a guy, a good post on Twitter that you forwarded to me today, kind of reacting to it and also taking Jamie Dimon into account from which corporation is he from?
JP Morgan.
Yeah, JP Morgan. So yeah, Trump kind of calling out the banks when it comes to the Clarity Act. Are you able to go down because I know he had a picture of Trump's truth or whatever you call it. He said the Genius Act is being threatened and undermined by the banks, and that is unacceptable. We are not going to allow it. The U.S. needs to get market structure done ASAP. Americans should earn more money on their money. The banks are hitting record profits, and we are not going to allow them to undermine our powerful crypto agenda that will end up going to China and other countries if we don't get the Clarity Act taken care of. The Genius Act was the USA's first big step to make the United States the crypto capital of the world, and getting the Clarity Act done is the next step to finish the job. And most importantly, keep this big and powerful industry in our country. I do have news for him that it is in all countries, but you scrolled. No, I messed up. The banks should not be trying to undercut the Genius Act or hold the Clarity Act hostage. They need to make a good deal with the crypto industry because that's in the best interest of the American people. The industry cannot be taken from the people of America when it is so close to becoming truly successful. Thank you for your attention to this matter, Donald J. Trump. So that's what he said. And then that's what she said. And then James E. Thorne says, for the record, Jamie Dimon says he wants a level playing field for stable coins. What he really wants is to make sure nobody can offer you a better deal on your own money than traditional banks can. Definitely true. The president is right to call the banks out on this. We've seen this before. In the 70s, money market funds started paying real yields while banks were locked under deposit caps. Banks cried unfair and unsafe, lobbied furiously and lost. Policymakers chose competition over protection. Savers got paid and banks had to adapt instead of suffocating the threat. Today's script is the same, just with better technology. Stablecoin issuers now operate under licensing, one-to-one high-quality reserves, liquidity and risk rules, audits, and strict AML standards. This is not the Wild West, yet Dimon still talks as if they exist with no reserves, no compliance, no oversight. He's not describing reality. He's describing a story that justifies shutting down a rival funding system. The Clarity Act is the real battlefield. On paper, it's about integrating crypto into U.S. market structure. In practice, big banks are fighting to ensure that anything that looks like a deposit with yield must either become a bank product or be relegated into irrelevance. Level playing field in their vocabulary means everyone wears the bank straitjacket or no one plays. Why? Because yield-bearing stablecoins blow up the quiet cartel behind record profits. Banks live on deposits that pay close to nothing, even in when risk-fee rates are high. They earn a clean spread and interest on balances parked at the Fed, while passing little of it through. Savers get crumbs, banks get the margin, blah, 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 blah. We know the banks are screwing us over, basically. The president's critique goes straight at this arrangement. Americans should earn more money on their money. Yada, yada. We read that. Crypto native firms, for all their flaws, behave like they live in a real market. They build new instruments, disclose, and pay up to attract capital. The banks build talking points and hire lobbyists. Stablecoins don't just threaten their funding, they threaten their chokehold on payment rails and transaction data. Call this debate what it is, not a fight over safety, but a fight over whether a protected deposit cartel gets veto power over technologies that finally let savers earn something closer to risk-free rate. In the 70s, policymakers chose competition. In the 70s, banks were forced to stop hiding behind regulation and compete. If Jamie Dimon wants a level playing field, he should stop complaining and start doing the same. Yeah, I think he totally nailed it here. And that's what it is. They don't want to lose the business, obviously. So, yeah, this is interesting. It's awesome to see Trump put the threats on the banks here. What do you make of all this?
Well, I want to share this and read this too at the same time. This is very, very similar to what we just read. And it says, imagine if the situation were reversed and stable coins were status quo, such that everyone had their money in entities backed one-to-one with U.S. treasuries. And then some guy came along and was like, I had this new idea called fractional reserve banking. We would laugh him out of the room. It's funny how that works, right? And what they want, we are definitely threatening um, their business model. The
Mhm.
reason they have record profits year over year over year, and we get such shit rates in interest when we decide to park money in a savings account, or even a CD or whatever it may be. um, they're giving so little of what they're making when they lend out the equivalent money, and charge people the interest and late fees and all the other stuff that they get. It's just crazy to me how um, these lobbyists are pushing back on this. I think it's great for innovation. As with anything, competition is always good for prices. You see it whenever a gas station on a corner gets somebody across the street that puts in a gas station too. And the next thing you know, there's a little price war, right? Prices go down. One guy lowers it, then the other guy lowers it. They're always trying to be better and get the business because they're a penny or two less. Well, it works the same way. These guys need to start playing ball, and understand that the people already know, and there's going to be more people that figure this out. Uh, Unfortunately, there are still a lot of people that don't know how the banks work, um, and people that put in money in a savings account and do nothing with it. It's unfortunate that they don't teach that stuff in school anymore, and people we'll eventually figure it out. I just hope they come to the table and we can get this done. I think that's another part of the reason why we're where we are. Just is there's just not um, clear regulations in place quite yet. I mean, they're close. The Genius Act passed. However, we're still waiting for that Clarity Act to get through. But
Mhm.
I think they're coming around. I really do. I think it may take a little bit more time, but I do believe we are at least headed in the right direction. So,
I agree. I mean, if it's coming out of the president's mouth at this point and putting pressure on the banks, I mean, yeah, it's going to be a slow moving thing, like a lot of the stuff with crypto has been over the years, and especially again, like this guy pointed out, the fact that you're taking money out of the hands of these banks. I mean, we'll offer something more than 1.85% interest or whatever it is. You know what I mean?
yeah,
Not only that, but I mean, the chance to with stables. Now, I mean, you can make the argument that if you hold USDC, I mean, that's still controlled by Circle and not optimal, but I mean, at least you can hold those tokens in your own wallet, that you actually control the seed phrase of and things like that.
right.
So yeah, very interesting. I think we're going to get development on it soon for sure, and good to see that it's being called out. This is one of those other, we talk about the macroeconomic stuff. A lot of the policy stuff has also it's been good. I mean, it's been good this, for the last couple of years. It's just that price action other than Bitcoin hasn't really followed. So yeah, good stuff
Yep.
to see there. Did you have any final thoughts on that before we get to the
Um,
news?
no, I don't think so. Again, I hope they get rid of some of these banksters and the people step in. A lot of things would happen if the people would just speak up. For a lot of times, I don't know if you saw Nuclear Herbs post earlier today, but he made the statement of, you know, if the people would speak up and be more vocal instead of just sitting back and saying, "Oh well, it is what it is." I think that's happening far too often. They were talking about the new age restrictions. Him and Brett, the
Yeah,
dev,
the developer. Yeah.
we're having a conversation about the age restrictions and things like that. But this goes as far as a lot of things with people would get together at the local level and speak up, and even those are things that we can control. So
Mhm.
you know you've got to start somewhere, and if you want to be involved with that type of thing, start at the local level, work your way up, and you get enough of a following, it can make a difference in the grand scheme. So
Yeah.
yeah.
Awesome. Yeah, good to see this happening. This is going to be huge if we do get that across the finish line. So, moving from that onto another piece of huge news today in terms of crypto and its takeover of legacy finance. So, Kraken, crypto exchange that we don't really talk about all that often here. And I mean, Coinbase has gained so much mind share, I think, over the exchange space the last few years that people do forget about Kraken. Although, you can make a lot of arguments for Kraken, I think, being superior in some ways. I admit that I haven't used it for a few years. I mean, I've always had an account there and stuff. But forgetting the name of their head guy. Do you remember his name? Jesse Powell? Is that
J
it?
Powell. Yep.
Yeah.
Yep.
Yeah. So he's a cool dude as well, from everything I can remember. But yeah, so Kraken gains access to Fed Reserve payment rails, which is unprecedented. So I sent you this post. It was a good summary from Eleanor Tourette. So new Kraken FX, the U.S.'s second largest crypto exchange, has just done something no other crypto firm has done before, secured coveted access to the Federal Reserve. According to a report by the Wall Street Journal released this morning, the exchange's banking arm, Kraken Financial, has been approved for a Federal Reserve master account by the Kansas City Fed, making the first time a crypto native company has gained direct, albeit limited, access to the Fed's payment system. The approval comes 5.5 years after Kraken filed its application with the Kansas City Fed in October 2020. The account gives Kraken a direct line into the Fed's payment rails, but not access to the Federal Reserve lending facilities. Under the limited purpose or skinny master account framework floated by Fed Governor Christopher Waller, the firm can hold reserves and settle in central bank money, but it cannot lend, access the Fed's discount window, or operate as a traditional commercial bank. Governor Waller is seeking to finalize his skinny master account proposal by the end of this year. The Kraken approval, sources tell me, is designed as a pilot program to trial the skinny master account concept. I got to give the nickname Skinny Master to somebody. I don't know who it's going to be, but I got to figure it out. The Skinny Master account is in line with the payments-only accounts provided by the central banks in the United Kingdom, the European Union, and Switzerland. Maybe Mark Zuckerberg. I don't know if people at Facebook call him Skinny Master. I don't know. The decision marks a historic shift for an industry-long shutout of the traditional banking system and signals a softer tone at the Fed, which critics had previously described as hostile to crypto under the prior administration. The decision also impliedly, I've never really seen that word typed that way, recognizes that the Fed believes Kraken has sufficient anti-money laundering and sanctions compliance practices to curb illicit finance risk, and that Wyoming's regulatory framework for special purpose depository institutions is in line with the federal banking standards. This could kick off a surge of Fed master account applications from other crypto firms on the horizon. Wyoming's custodial bank, which had been chasing access nearly as long as Kraken and has been engaged in litigation against the Fed since 2022. Anchorage, an OCC-regulated trust bank, and Ripple's U.S. banking partner have also applied for master accounts. More to come. So very interesting. I think it's interesting that Kraken is the first one to get one. I mean, this makes me curious if Coinbase also has filed for this before. I mean, I don't know why they wouldn't have, but very big news. What do you make of this, and what it seems like could come of this also?
Yeah, it's very odd, right? I just found it odd. Like you said, Coinbase, Crypto.com, some of these bigger names. Why was Kraken picked? And maybe Brian, is it Brian Armstrong?
Armstrong. Yeah.
Maybe his fighting the the system and isn't helping their case. And Jay Powell, they had gone after him several times as well. And I know he kind of paid several settlements to keep them off his back as far as the SEC goes. I find it interesting. I find it very they get into a lot of the little details here about what they have access to and what they don't. And I don't think people understand, they're talking about the not have where was it? They don't have access to the lending facilities or the Fed's discount window. What the hell is a discount window?
I'm not sure. Yeah.
They talk about these things. It's like, it's just normal talk, but I want to know what a discount window is. Am I getting $10,000 for that at a cost of $9,000? You know,
Right.
maybe that's what it is. It's just interesting how they talk about it so blasé. Uh, but either way, I think it's great. I think it's a great first step, and um, yeah, the more that this kind of thing can happen, the better, because again, you want the banks to play fair. They're already starting to open up doors to some of these exchanges. Now, what does that entail, and what does it really look like? Could you? I don't know. So, I mean, they don't get loans, so you can't go to Kraken and say, "I want to borrow money," and then it's right in crypto. So, I don't know exactly what it means for them, other than they have access.
Hmm.
Um, right? What does it mean? What does it mean in the grand scheme of things, as far as their business goes? Is it easier just to go in and out of crypto, from cash to crypto? Does that, is that the only benefit? I'm curious to see how it plays out, and what kind of benefit that gives them. I agree with you. I rarely use Kraken. I do have an account, but I haven't used it in forever, basically since I've had access to Old Glory. So
Hmm.
I'm very excited about their platform too, even though it's not it doesn't have access to the Federal Reserve. They Old Glory probably has access as a bank. So um, it's interesting to see. But again, I want to see what benefits this gives them, and why they were picked. It seems a little strange, that they would pick them as the guinea pig, or as the first one. So yeah, what do you think?
Well, I was just kind of Googling just because I'm so enthralled by Skinny Master. I was just looking at like I guess these Skinny Master accounts are new, and they were proposed by Fed Governor the Christopher Waller in late 2025. I'm reading. Purpose is to allow non-bank entities like crypto and fintech to settle payments directly, reducing reliance on third-party bank partners. Restrictions: unlike traditional master accounts, these do not pay interest on balances, prohibit daylight overdrafts, and bar access to the Fed's discount window, whatever that is, like you just said. Safety measures: they may include balance caps of a certain amount. Target users: non-depository institutions that provide payment services, such as stablecoin issuers or specialized crypto firms. And then in development, and this is happening right now, it says in early 2026, the Federal Reserve sought public comment. And as of March 2026, firms like Kraken have secured or in the process of securing this type of access. So the proposal aims to create a middle lane for innovation, addressing the risks associated with non-banks while providing a faster, more direct method for clearing transactions. So
Hmm,
yeah, it sounds like a middle ground type of thing. So,
okay.
yeah, it sounds relatively new. And
Yeah.
again, yeah, I'm not sure why Kraken was the one that was approved so far. Maybe it's just a matter of more are coming. You know what I mean? And it sounds like maybe there are. So, yeah, yeah, good to see. It sounds like maybe it was an inevitability. Like maybe this was going to be happening no matter what. But Kraken obviously applies for this back in 2020, and
Yeah.
here we are now. So very good to see for sure.
Yeah, I would be surprised if Coinbase hadn't applied.
Yeah, me too. Yeah,
I would think they would as well. Again, crypto.com, one of the bigger ones. I don't know how they rank. I didn't realize Kraken was number two.
yeah.
What's the other one owned by the Winklevi?
Gemini.
Gemini.
Yeah, I don't know where they rank anymore either. I don't. They were my least favorite of the big few.
Yeah,
Yeah,
I think I have an account, but maybe used it twice.
yeah,
Just trying to create some other accounts to have them as a backup plan. But unfortunately, when you don't use them, that's when you get locked down. If something
right,
strange happens, all of a sudden you got a couple grand coming in or out, and they're like, whoa, what's this?
right, right.
So
It is one of those things. I guess that brings up a good point. We don't talk about this too often, but when it comes to exchanges, now again, we've also talked about like 0x Coast in terms of getting into Pulse Chain on here a lot.
mhm.
But the thing is, you never know at any given time as this industry, it's not the Wild West anymore, but things still change a lot and are changing a lot. So we've always talked about optionality. Like, I think it's good to have as many options to get in and out of anything as you can. So yeah, that's a good reminder maybe for you and I to maybe log into these Kraken and Gemini accounts we have just to see if we even have one anymore. Just to kind of refresh them a little bit. And you want to, maybe you have 0x Coast, you got an Old Glory Bank account, maybe you have a Coinbase account. I mean, most people that are here right now probably have a Coinbase account, let's face it, but you never know. I mean, it's probably good to have those other ramps open and ready to go just in case. You always want to have that option, So cool. Well, this is good good news, good development, obviously, for Kraken, and it sounds like we're going to see more of that as well. Is there anything else you wanted to get to tonight, Ewok?
I don't believe so.
You wanted to mention the liquid loans recovery mode thing. I think that's the last thing.
Yeah.
Do you want to get to that, or we can?
Well, it's not in recovery mode anymore. So again, it's not important. I think we can touch on it a little bit. I guess just trying to explain. I think there were some people that had been confused about what it really meant. And essentially, liquid loans is a lending service, right? It works with Pulse. You can loan your Pulse. You get USDL for your loan. You can collateralize as little as 110%. Or borrow 90% basically of what you put in and the value. Now, when the system itself of liquid loans gets under collateralized, when it drops to less than there's a range, I think it's between 150 and 140% of overall collateral. It switches from regular mode to recovery mode, which means you can get liquidated a lot quicker. And I think people are freaking out a little bit about that. The easiest way is to add a little bit more or pay back some of your loan. That's the easiest way to do it, is to pay back some of your loan so that your overall collateralization goes up and the system becomes a little bit more stable. It doesn't want to, especially as the price is going down. It's completely the opposite when the price is going up. If you put a loan in and you take 90% and the price goes up 20 or 30%, you then have access to take more out because you're now over collateralized. So I think it's going to be a very important thing as we get into a bull market, if we ever get into a bull market, for people to catch a top. And, if they do want to take some profits off the table, I think these methods are going to be a great tool for people to use. Also, when you do a loan, it is a tax-free transaction, right? You're taking a loan and you're paying it back. Now the liquidation, if it happens and you do catch a top and it goes down and you do get liquidated, I do believe that becomes a taxable event. Again, consult your tax lawyer for that information. But again, it could be a good system. But people were, I kept a little bit. I think I have $150 in there as staked USDL, and it was earning at one point 1,200% APR. Because they were trying to get more USDL into the system while it was in recovery mode. I think it's back down to maybe 15 or 20% now, which is still great. And you get paid in the which one is it? The loan token, I believe, is where the revenue comes in. And you also get a portion of liquidated Pulse. So you get Pulse rewards as well. Now your staked amount doesn't always stay the same. So if you have, say, $200 in there staked, and you look one day and you're down to $170, that means you probably have a bunch of pulse that you got at a discount. So people that were liquidated or close to liquidated or whatever, you end up buying their pulse at a discount. So you can always change that pulse back into USDL to get back to your original amount and still come out ahead. So it's just an interesting thing. Some people had brought it up before. It's definitely not a system that you want to get into if you aren't exactly sure how it works. Because like I said, you stake USDL thinking, well, I'm staking my money, but you come back and there's less there than you staked. And you're like, what happened? So there is a risk of that. Now you are getting the equivalent of Pulse back for that at a discount. In fact, you're making out. But if you don't switch it back to the USDL right away and it goes down even further, you're losing value. So it is something you have to kind of keep an eye on and monitor as time happens. You don't want to just let it go. It's not a set it and forget it type thing.
Right.
No.
Yeah. Oh. Yeah. And really the risk, like people were talking about it a couple of weeks ago, they were talking about it in relation to just the price of Pulse going down. I mean, that was really like the thing that were triggering people to talk about it. Right.
Right. Exactly. Well, that's what made when the price of Pulse goes down, that's what makes it go into recovery mode, because people aren't adding more collateral or paying back their loan. They just took it all. So it was getting very close to being a critical situation where there could have been mass liquidations that happened. So we're trying to prevent that. And that's why I said we had it on the topic for a few weeks ago when it was really happening, and we just didn't get a chance to talk about it. So it's yes, it is just another way to get wrecked if you don't pay attention and you don't know what you're doing. So
definitely,
you definitely want to be aware. And there are other platforms out there like that. There's one for Hex, there's one for Ink, there's one for PulseX, and there's one for Pulse. So they all operate very, very similar. So just keep that in mind.
Well, good to know. Good to know that hopefully it can be avoided and not necessarily something you want to be playing around with either. So, but yeah, we did see that floating around. So good to get into. We had a great show tonight. We appreciate everybody in the chat. Valiant Low Key. Let's see here. Viper Styles, Amneron in there. Sorry. Parabolic Monkey. I like that name. I did see old DJ Moonboy swung in here for 1 minute and said fellas and then left, I think. Tripod checks my pulse. We had, who else was here? Tam was here. We had Hexagon Michelle, I saw was here. Oddball, Philly, whole bunch of you guys. We appreciate you guys. We do this every Wednesday night at 6:30 p.m. Eastern Standard Time. We'll have a lot more to talk about, of course, next week as we make our way through March. Will we maintain this pump or sell immediately back down and get bitch slapped back down into the bear market? I guess we shall see. So we really do appreciate all of you guys. Thanks for making it a fun show. There he is. He's still here, DJ Moonboy. Jerry Fabio, you as well. So we'll see you guys next week for Crypto Ewok. This has been Blarney Boy Crypto right here on the Creed of Crypto.
See you guys.